Welcome to the Cattle Talk Podcast, your weekly breakdown of cattle market fundamentals, key news, and the insights shaping the industry. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Today is May 29th. I've got Nick here with us today. How's it going, Nick?
Good. Thanks, Mike.
Good. Well, we're going to talk about the cattle market today on this podcast. Let's focus on a few things. We're going to just go over the cattle on feed report last week. Going to talk about weights here a little bit and LRP and some things like that. But let's start with this. Let's start with just what in the heck happened to close out our week on the cattle market, Nick, because holy cow, down another 5 on feeder cattle today, down $2 across most of the board on the fat cattle. What was some of the reasoning for such a weak close going into the end of the week, you think?
Yeah, it just feels like a lot of pressure on everything here today, Mike. I think the cattle market, especially though, certainly has some fundamental stuff that's going on, probably pushing this thing a little lower, and causing some fun liquidation. Certainly the cattle on feed number that we saw there last week, Friday, that continues to put some pressure on. We got just shy of 11.6 million head on feed now. That's actually slightly higher than what we would have had on feed in May of 24, right? So even though we're harvesting a lot less cattle today than what we were last year, we're actually harvesting fewer cattle the past number of months than what we actually had placed for those months. And that's, I think, we've built up the supply a little bit here. And it's going to be really interesting going forward into June and July, if packers are going to pick up the pace or not. There, certainly the margins, as we're going to see here later, but the packer margins definitely are deep in the red, right? And so they continue to try to push cash lower. Not hearing much cash trade at all to speak of really yet. With the bids out there are 255, 256. Did hear of a little bit of 258 stuff picked up in eastern Iowa, but really the cash trade hasn't developed much. We're not, we thought maybe there would be some more basis traded cattle today, just given June board around 248 and cash at 255, yet basis certainly has strengthened here in the past few weeks, but not seeing much cash trade develop. That basis, would be considered strong for right now, which it usually is right now here in the last week of May. But for what it's come from, we had a terrible basis there early, kind of that late April, early May time frame, and certainly has come up now. So hopefully that will drive some sales here yet, but I think just the overall, lower cash trade, the lower offering, just isn't bringing much cash sales around here yet.
Let's talk about this cattle on feed report. What were some of the takeaways you had from it? It seemed like we fell within the range of expectations on most of the categories, but not exactly the most friendly either, was it? So what can you tell me about what you saw out of the report?
Yeah, I think the report kind of pretty much all came in within expectations, but the placement number being higher, and that's what is causing our on feed number to be a little higher now. But that was probably going into the report. I think that's why the market sold off a little bit with those higher placements. We haven't seen higher placements than a year ago for quite some time, but there's quite a few cattle probably that are actually getting taken off grass or maybe intended to go to grass that are not going to grass now because of the drought situations kind of in the west and the south there. So placement numbers are up a little bit, causing a higher on feed number here.
What can you say about the year-over-year comparisons of fed cattle?
Yeah, I mean, just, when you look at that on feed number, and what are, weights are down here a little bit this week, down 7 pounds, but it's, we definitely got to have a supply of cattle out there that's not as current as what our slaughter would show, I guess. And so going forward here, and certainly the market too is steep discount, right? Like we got a $9 spread here between June and August, and then another close to $9 spread between August and October. So the market definitely is kind of envisioning this thing to eke lower too, as we start to work into kind of a more non-current supply.
I'll have Cade pull up a basis chart here too. Just want to talk about that a little bit. You think there's been some basis getting played here recently?
Well, not as much this week. This week we're the cash sales just aren't happening so far. We'll see if they start to bid for them here yet, but not much happening at this 256, 255 area.
Seems like the asking is sticking around that 260, and they're not wanting to break much below that for the time being, are they?
Right.
So you talked about the August to October spread there. That's getting pretty wide at this time as well. Packer margins are incredibly in the red. What can you tell me about how just overall profitability looks going into next October?
Well, we definitely are think that our cattle feeders should utilize that spread a bit here, just as a basis play, right? I mean, if cash is going to stay decent going into August, we ought to probably be putting some hedges there in August versus that October deal, and either that spread is going to narrow or cash is going to stay high right towards the end of August. Could even be higher in that first couple weeks of September. So we definitely think there's a place for utilizing that spread. Probably not dumping everything there, but the market dynamic has changed considerably just here in the past couple weeks with the steep discount to the fall and winter cattle there.
Where does LRP come into play here for like this October contract and some of the quotes you've been getting out of that?
Yeah, if you want to go to that last slide there, Cade, or second to last. So what's really interesting here right now, and you occasionally there's these nuances in the LRP offering, but like last night or the past few days, I think this has been one that's really interesting. So the LRP offerings here are kind of for late September. Last night's was for September 24th. And you could protect a late September animal there at 237 for about 682 100, and the October board was trading 232. So if you could have a floor on those late September cattle $5 higher than the October board. So in our minds, it doesn't make a whole lot of sense to own any October puts these days. Like if we own October puts, we really ought to be converting those to this late September LRP, because you're only a short couple weeks there from October option expiration, and I think that makes a lot of sense versus owning those October puts.
What else do you got for us here today on the cattle market to wrap up our podcast?
Well, I wanted to show that that October crush number just here in the last week, that's lost a lot of ground because October live cattle has been down, and this is a little bit dated here. I don't think that includes today's numbers even, but October cattle down about $9. You've had, other than today, we did have corn up about 7, and then the index down 250 week over week. So that October crush really took a hit here recently, and just kind of showing that whole dynamic of futures moving lower, drastically lower, really into the fall and winter. Also wanted to show kind of what with that cattle on feed report. That's the next slide lower there, Cade. The way these placements are coming in now, we're even though the supply of cattle is increasing, obviously going into July. So, and the tightness between what we have available this year versus what we had available these same months last year is narrowing quite a bit. And actually, by the time we hit August, now this does not account for any carryover cattle, does not account for any cattle that we're not current on, but by the time we get to August there, we almost have the identical supply to what we had last August. So that's definitely, I think, out there in the marketplace too. I mean, we saw that with higher placements this last cattle on feed report, and as we go forward here, the supply situation, you combine that with how big we're making cattle today, you really could have kind of a recipe for what the market is suggesting today, right? A $20 drop in cash from now to September. So it's kind of all it's starting to make a little sense, but we'll see how that if packers are going to increase the kills here with where their margins are. It certainly doesn't look like that's going to happen anytime soon, but if they do start to increase the kill, it could be a little bit burdensome yet for this fall.
All right. Well, thank you for your time today, Nick. Please click on the link in the description below to access our daily market commentary, any other marketing info that you'd find necessary. You can access our website at professionalagmarketing.com. Go to the About Us page, learn a little bit about professional ag marketing and what we do for a living here on the brokerage and insurance side of the business. So thank you for joining us all today, and hopefully we will see you next week on Wednesday at the World Pork Expo.